Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this video where I'm going to be analyzing the British pound, Canadian dollar, and really just walking you through some of the processes that I go through whenever I analyze a currency pair. And this is really in response to a trader who wanted to just find out a bit more about the pound CAD, and I'm quite bearish on this currency pair, meaning I'm going to be buyer of the CAD. I'm not a buyer of the British pound at all, even though there is an agreement between the EU and the UK. So far, Theresa May today, and that's the big news. The market really hasn't reacted to it, and I was saying to another trader today that it just depends on the deal, also what the deal is, and also really how the pound is going to fare in the lead up to Brexit, as well as after Brexit as well. So it's any moves with the British pound higher is really sentiment driven and not really based off of really any fundamentals, because Brexit has to take place first of all, and then we have to see the effects on GDP and monetary policy for any kind of long-term buys. For me anyway, I'm not a financial advisor, but I'm going to stay bearish on the pound until otherwise proven. Any moves up, I'm just going to be shorting. Anyway, first of all, just written maybe just like a 4-step process and some of the things that I do. And one of the things obviously is fundamentals, and I've touched on fundamentals and sentiment, right? But if you want to really kind of delve deeper into fundamentals and sentiment, I have a free course, fundamental analysis course, and the link is in the description box below, and I go into a lot more detail and show you really how I go about analyzing currency pairs. But for the two that I'm going to be analyzing, obviously the pound, United Kingdom, one of the sites I go to is Trading Economics, right? And I go to indicators, countries, and then I choose UK, and then I'm going to also compare it to, and I've got it on another tab, which is the Canadian dollar, right? So what I look at is the overview, right, of the each country's economic state, right? So Canada and UK. So if we analyze the UK, right, these are the most important, and what's really important is I look at GDP, unemployment, inflation and interest rates, balance of trade to a certain extent. Government debt to GDP isn't such a worry, to be fair. No one really worries about that, and this is really at an absolute extreme level. But mainly it's these especially the GDP, inflation and interest rates. So if we compare the two, right, GDP growth rate last reading, which was September, the GDP grew 0.2% to 0.6, right, and the Canadian dollar grew from June to 0.7, so it grew 0.3%, right? So they're both roughly around the same kind of growth figure. Unemployment, Canada went down, and the UK slightly went up by 0.1. Inflation rate, which all but major Western central bank targets are the 2% level. So inflation rate is actually above the 2% level on the UK, and also on the Canadian dollar is also at 2.4 as well. The difference between the two, though, is really interest rate, right? Interest rate hikes. Interest rates at the moment, the central bank, Bank of England, are holding their interest rates, and while the Canadian dollar are probably looking to hike their interest rates. If we go into interest rate, and we can see for the Canadian dollar, they've been hiking their interest rates to control inflation. Problem is with the UK, they wanted to potentially hike interest rates, but because of Brexit, I think Mark Carney has pretty much said yes, they have to employ a wait and see approach. So with Canada potentially hiking interest rates and the UK holding interest rates, there's a bit of a differential in the two, right, in central bank monetary policy. So they're pretty even from from an economic point of view, but from a sentiment and political point of view, the Canadian dollar and Canada in general is on more stable footing, right? So I don't want to be a buyer of the British pound, or I'll be a buyer of the CAD. Only problem with the Canadian dollar is oil. Oil is tanking at the moment, and and oil being Canada's main export, the price of oil does affect the price of the Canadian dollar, right? So it's pretty much a wait and see with oil, and keep your eye on oil whenever you're trading the Canadian dollar. But let's get into now the technicals. So technically, we have to look at, first of all, the market state. What's the market been doing? So pretty much since I'd say, from March the 20, let me just get rid of that, March the 19th, 20th, we've gone from this high, and we've really, created lower highs and lower lows. So in a sense, we've been, people say that's a trending market. It can also be referred to as price discovery, right? Obviously, Brexit coming into effect, the Canadian Bank of Canada will raising interest rates, so you had this currency pair pretty much come lower. So now we are kind of entering into a ranging market now in real time. Let's say, for example, we were here, right? We're here in real time. Now, we have no idea, we have absolutely no idea when this market is going to enter into a ranging market or a price acceptance, right? Because at some point, buyers and sellers are going to agree on a rough area or rough price range, that they're willing to pay for the Canadian dollar British pound exchange rate. And it's somewhere between, obviously we know now, today it's between the 1.659 or 1.66 exchange rate to 1.73, right? But back in August, we had no idea. So after every price discovery or trending market, we will enter into at some point a ranging market or price acceptance. Now, we don't know where or how big this range is going to be between buyers and sellers, basically considering what would be considered an expensive area or a cheap area. So what we're waiting for is for the market to tell us where the range may potentially start from. One of the first clues that we want to look for is obviously supply zones. Now, supply zones are areas where we think that there is a potential bargain, right? So there was an area here, and area here. So this is what we knew. This isn't hindsight bias, by the way. This is, this is what I actually was analyzing and trading at the time, right? Because lower highs and lower lows are areas of potential value, and we would have been buying the Canadian dollar, right, based on our analysis anyway. And even if you're a trend trader, right, what you're looking for is for price to potentially be ranging between either this low and this high. So it would have been, we don't know, but potentially we could be ranging between this low and this high, right? Here, that could be the price acceptance. We could be ranging between this low and this high, right? Right, between here and here. The next place we're looking to potentially enter a range from is this low and this high, or again between this low and this high. Alright, so this is where we would potentially be entering into a ranging market and price acceptance, right? So if you're a trend trader, and whether you're a trend trader or a range trader, you have to be looking at these levels of value, right, in order to establish either a trend continuation or potentially a range. And this was what we would consider a bargain area for the Canadian dollar. And the reason why it's a bargain is because prices went lower, right? So when prices do come back up to this level, this is potentially another bargain area. So if we go forward, right, we're gonna go forward. We wait for obviously price action to prove that this is a level. We're not trading every single level of supply, right? So prices did come up into this area, right, into this price zone, and then it started to give, started to sell off. So then you would zoom down into a lower time frame and see if you saw an entry and then potentially get short, and then you saw prices sell off. So we know now, or we knew then, that potentially prices were going to range between that supply zone there, right, and potentially this area of demand, right here. So why was this an area of demand? Again, in previous videos I've explained this, but we've made higher highs and higher lows. So once you make higher highs and higher lows, this becomes an area of demand, and this would have been plotted in real time. So we know that potentially we could be going into this range right here. So as we go forward, right, we don't know, right, but this is obviously a proven expensive area or bargain area for the Canadian dollar, right? This is a proven bargain area because basically buyers got in and started shorting the market. When prices come back up again, is this going to be a potential bargain? Now we don't know what was happening sentiment wise or fundamental wise, right, but these are the areas where we're looking to be buyers, right, of the Canadian dollar. So we wait for price to tell us, right? There was a bit of a pin bar here, and then we had a bit of a sell-off. Prices went higher into this supply zone, and we got some price action, right, that then proved that this, there was some demand here for the Canadian dollar, right, which again sold off. So now we're looking at potential ranges between this low and this high, right? And as you can see, prices now are ranging between that high and that low. So again, when prices as well, and I say this in my weekly videos, the more times a level is touched, the weaker it becomes, right? So I wasn't expecting this really to hold it. It touched once, twice, 3, 4 times for certain reasons that are not really going to go into this video, but just know that the more times a level is touched, the weaker it becomes. And now potentially we come up into this supply zone, and then we potentially are going to range from here, right? Again, we don't know exactly, but we wait for certain price action to occur, and then we're waiting for prices to either break the low or stay within what we would consider again price acceptance between this 1.73 level to this 1.6566 level, right? Because again, we've been ranging, now we've got price acceptance. So as this has occurred, and this is, we go to basically the present day, the price that we're at now is actually fair value between what we would consider an expensive area or a bargain area, depending on what currency you're looking to buy or sell. This would have been considered a cheap area for the Canadian dollar, and this is a cheap area if you're buying the British pound. We are between an expensive and a cheap area is fair value. So what do we do right now in the present day, right? One of the things I don't do is I don't trade intraday levels. I don't trade intraday supply and demand zones. I look for daily supply and demand zones. Intraday supply and demand is a bit wishy-washy, and you're looking at basically the overall market, right? All traders pretty much look at the daily time frame, right? Whether you're an intraday time frame trader, you will look at the daily, right? Not all daily time frame traders look at the intraday, right? Meaning that there's obviously going to be more supply and demand on daily levels, right? Because all traders look at the daily time frame, but intraday, right, there's not going to be daily traders looking at traders who trade the daily time frame and weekly time frames are not going to be looking at intraday levels. So there's if I'm seeing a level of supply, I'm not even looking at a level of supply or demand intraday, right? So there's going to be less supply demand compared to the daily time frame on an intraday time frame, right? So from looking at the overall bigger picture, we're at fair value. So at the moment, your options really are waiting for prices to either prove that this area is a bargain for the Canadian dollar, and if the market then makes new lows, then we will create a supply zone within this area, because we know that buyers for the Canadian dollar have piled in. Something's happened here, creating a lower highs, right? You got a lower high, and then lower lows. We know that lower highs and lower lows are areas of value, right? And then if prices do come back up into this area, we know that we want to be sellers here. All things being considered regarding fundamentals and sentiment, etc. Right? At the moment, we're just pretty much in no man's land, right? When it comes to what we should do as far as buying or selling, right? If prices do come back up here, then we know that this was an area of proven bargain. Bargain hunters got in, right? So we potentially, if prices come back up here, we want to be sellers if we obviously want to be buyers of the Canadian dollar. And ultimately what we're trying to do is as supply and demand traders, right, is we're trying to understand value, and we are always trading at basically market highs and lows, right? We're always best positioned to be trading at market highs and market lows, right? So prices come up here, we see some price action, and if this is truly a bargain area for the Canadian dollar, we have a brilliant risk reward, right? We can trade it down to the lows, right? If we're right about this being a bargain area. Are we going to be right all the time? No, but getting in here, we had brilliant risk reward. Again, getting in anywhere around here, we've had a decent risk reward, right? Potentially, if you are in this trade to the short side, right, this would be represent a nice 4-5 to 1. And it's the same thing to the upside, right? Upside, you're looking at ranges. If you did end up buying the pound down here from a proven demand zone, you're trading it up to at least the highs, right? These are what I would call high probability setups, right? From a technical, say high probability, but high probability if you take into account, supply and fundamentals and sentiment. I'm not necessarily buying the British pound, but from a risk reward perspective, right? Demand, is this demand? You don't know if there's going to be strong demand, but you have a great risk reward, even if you're trading it up to what would have been considered the range highs at the time, right? And again, if we go back to here in real time, this is what the range would have potentially looked like. So you've got great risk reward depending on obviously your entries, time frame, etc. So going back to just where we are now, let me just clear this chart up with all these arrows. We are really at a an area where I'm not necessarily considering. What you can do is set an alert, right? Is just set a pending order, if depending on obviously your platform, add alert, right? And then when prices come up into this area, that's when you want to start looking at, you know, this zone here. There's no really need to look at this area here and to trade unless, you know, prices then break below. So what you can do is place a pending order here and potentially place a pending order if prices start breaking below here, right? Add alert. If prices do start going below that alert and you're watching it and it starts going lower, then you do your, you know, you put your supply zone here, and then you place another pending order around that supply zone, and then only watch this chart when or if prices come back up into this zone. I'm not a fan of sitting down all day and watching charts, right? You know, we've got lives and things to do, but you know, day trading isn't for everybody. And if you're like me, then you know, I definitely advise you use pending orders, and don't worry about you know, looking at the charts all day if nothing is happening. I know we kind of sit in front of the screens all day and watch every uptick and downtick. There's no need. Do your analysis before, right, and then place your pending orders, and then just walk away or do some analysis on some other price charts, and then again set your pending orders on those, and then get on with your day. Do whatever it is that you need to do, whether it's, you know, picking up the kids from school or dropping them to school, or if you've got a job or whatever it is, right? Trading shouldn't be, you know, sitting at the computer screen all day. It's not fun. It's not you know, I know at the beginning of our trading journey we all do it, but it gets to a point where you know, you want to, yes, make money and you're learning, but you also, you know, there comes a point where you have to kind of trust yourself and trust your analysis, right? And set your pending orders, and then just walk away from the charts and do some other stuff. So yeah, I think that's about it. I cover everything. Proof of bargain, I guess I didn't cover it, but just to say that, you know, you want the market to prove that, you know, there's an area, right? You know, it wants to react. Proof of the that the supply zone is working, or, you know, it's there's a bargain area, and then when prices come back up into areas, there's the proof, etc, etc. So been rambling on a bit, but hopefully you found that a bit useful. If you do have any questions, email me at info@trading180.com. And for the trader as well that asked about the pound CAD, I hope that that did help. And anyone else who was looking at this currency pair, hope it helped. And you know, definitely apply this type of analysis to you can apply this to any other currency pairs within obviously the market and that. And if you do want to find out, you know, a lot more, I have a supply and demand course on the website where I go into a lot more technical analysis and some other concepts like capture pain relief zones, right, which takes advantage of traders who are captured in their positions, right? This is a zero-sum game, you know, this the Forex markets, and I'm trying to take your money. So I know when you've messed up, and I'm going to be taking advantage, and I can show you how to take advantage as well. Not just supply, it adds into the supply and demand equation as well, and it's all congruent within finding value and making the most of your risk reward. So I will speak to you next time, and if I think of another video to make this week, I will. If I don't, if you want again to message me, and if there's anything you want to ask, and I'll try and make a video on it if I got the time. So guys, take care, and I'll speak to you soon.